Welcome to Smart Stock Watch. Today is December 9th, 2025, and we're diving into Lakeland Fire Safety's fiscal third quarter 2026 earnings report. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Lakeland Fire Safety, a leader in protective clothing and apparel, has just released their Q3 2026 results. Let's explore how they've performed this quarter.
Revenue and profitability overview. Let's start with the top line. Lakeland reported net sales of $47.6 million for Q3 2026, a 4% increase year over year. However, they also reported a net loss of $16 million. John, can you break down these numbers for us?
Absolutely. The increase in net sales was primarily driven by a 31% growth in their fire services segment, which contributed $25.3 million. Despite this growth, the company faced significant margin pressures, with gross margins dropping to 29.7% from 40.6% last year. This, coupled with increased costs, led to a net loss of $16 million, or 164 cents per share.
Strategic initiatives and market expansion. Despite the challenges, Lakeland has been proactive with strategic initiatives. Can you tell us more about their recent acquisitions and market expansion efforts?
Sure. Lakeland completed strategic acquisitions of Arizona PPE Recon and California PPE Recon, expanding their footprint in the U.S. PPE market. They also opened a new 8,000 square foot facility in Fresno, California. Additionally, they secured a $5.6 million contract with the Hong Kong Fire Services Department, highlighting their global reach. Looking ahead, they have $178 million in global tender opportunities for FY27, which could significantly boost their revenue.
Operational efficiencies and future outlook. Operationally, Lakeland reported an operating loss of $1.6 million and a significant drop in adjusted EBITDA. What are they doing to address these issues?
Lakeland is focusing on operational efficiencies to improve margins and cash flow. They're implementing inventory reduction strategies to release working capital and reduce carrying costs. Additionally, they're prioritizing liquidity and debt reduction. However, due to the current challenges, they've suspended their quarterly cash dividend to preserve cash.
EPS forecast and analyst expectations. Let's discuss the earnings per share. Lakeland reported an adjusted EPS of $0.19, which matched the forecast by the single analyst covering the stock. What does this tell us about the company's performance?
Meeting the EPS forecast indicates that Lakeland managed to align with market expectations despite the challenging environment. The consistency in EPS reflects their efforts to manage costs and navigate margin pressures. However, the limited analyst coverage suggests that the stock might not be widely followed, which could impact investor sentiment.
Key takeaways. In summary, Lakeland Fire Safety reported a 4% increase in net sales for Q3 2026, driven by strong growth in fire services. Despite facing margin pressures and a net loss, the company is actively pursuing strategic initiatives and market expansion. John, any final thoughts on Lakeland's investment prospects?
Lakeland is navigating a challenging environment with strategic acquisitions and a focus on operational efficiencies. While the suspension of the dividend might concern some investors, their proactive approach to market expansion and cost management could position them well for future growth. Investors should keep an eye on their execution in the coming quarters.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Lakeland's performance in the comments below. Until next time,